Hello everyone, welcome to the Ichimoku charts.com daily analysis for the S&P 500 for Monday, July 15th, 2013. And welcome back everyone after a short break for the US holiday period. And during that period we've seen the market appreciate quite dramatically. A series of white body candles extending up through this zone of resistance that I've highlighted previously, this yellow highlighted zone, and the market broke out above the top of that area for the previous day's trading. Today the market is attempting to test the all-time high at 1687. The way this market is developing at the moment is a mixture of large-bodied and small-bodied candles, and we had a very nice large-bodied candle here that tested to the top of that zone of resistance. Buyers in control and very strongly committed at that point. The next day's trading we had a very large size reduction in the size of the body of the candle, suggesting that the buyers were starting to lose some momentum. And even with today's trading, a reduction in the size of the body of the candle, suggesting that all is perhaps not well with this very strong uptrend that the market's been in, and that there is potential for a change of trend back to the downside. We also have a splitting top type candle, and that's a candle of indecision. So even though we have a white body where the buyers still have momentum, they've been losing that momentum as the trend is continued on its way. And we also now have some downside price rejection from the highs as the market tested up towards the 1687 level. But by the same token, there was some upside price rejection here on the lows, and that's why we have an indecisive type candle. The buyers have still closed with control, not as strong control as they did for the previous couple of days trading, but this does suggest that we may see some selling coming in up around that 1687 level. There is a possibility of the market trading above there and being rejected, but what we should now look for is perhaps some support around this level, around the 1675 region. We had previous resistance there where the market was rejected very strongly from that area. We've traded above there, and there is now a possibility of that area becoming support. That area could test all the way down through to the bottom of this zone, down to around 1650, but let's watch that. If the market does come off and find support here, it could be a good sign that the buyers may then start building some momentum for a test to the upside to breach the 1687 level, and even to test up to the 1700 level. So that's what we'd expect. And this the character of this uptrend has been quite strong, except for a couple of trading days, and now as there is a good possibility of it terminating with these small candles, it does suggest that momentum is waning up here, and it's not rare occurrence to see that. It is quite common to see a loss of momentum after a very solid uptrend like that. Now in terms of the Ichimoku, the Fibonacci extension, we're examining the relationship of the first time frame uptrend that the market's currently in, comparing that to the previous time the market's trending up. And a few days ago we saw the market test through the important 261.8% level in a bullish manner. It does suggest that there is potential for the market to trade up to the 423.6% level, but we do have that very strong resistance overhead, and I doubt that the market will trade up to that 423.6% level in this first time frame downtrend. It's more likely that the market will retrace from one of these levels, either here where we're trading or even just above. In terms of the Fibonacci retracement, however, the 423.6% level is giving us a more realistic target, and we have broken out above the 261.8% in a bullish manner, and the 423.6% level is at 1697, coinciding with that round number resistance around 1700, and that is a more realistic target. Unfortunately though, the way the market is trading at the moment with these small bodied candles, it doesn't suggest that the market will trade up there, but what we're looking for here is the market to make a higher high and higher low if we are going to test up to those levels. The spinning top type candle does suggest a possibility for a change of trend, so be on the alert for a potential lower high and lower low. Now in terms of Ichimoku, obviously a bullish market in all three time frames. A few trading periods ago we saw the market break out up above the cloud once again, and it was on a bullish candle, and that's what we like to see. It gives us more confidence in the trade. So a bullish signal, buy signal here as we broke out up above. The market has been trending up since then for the past 4 or 5 consecutive days, so it was a good signal. The market's also trading up above the Kijun Sen and the Tenkan Sen, so the market's bullish in the medium and fast term time frames as well as the long term time frame. And the Kijun Sen or the Tenkan Sen crossed above the Kijun Sen, and that occurred below the cloud, so it was a weak signal, and the price action was within the cloud when that occurred. And following that, we had confirmation of the buy signal here. The fact that the price action broke out above the cloud suggested that all of these signals combined meant that the market was in a very, very bullish mode. Looking at the Chikou span here, that now is above the corresponding price action and has been for the past week or so, crossed above there. So the negativity that we saw in the market was relatively short-lived, and now back to bullish mode with this test on the important areas above. As I've mentioned, we do need to watch for a potential continuation of the trend. Strong barriers overhead at this high around the 1687 level. We could see some selling coming in, but there is a possibility of the market testing up to around the 1700 level and selling off. I doubt that the market will do or trade above the 1700 level in one move, but a likely scenario is a test to one of these levels, the market to come off, to find support somewhere within, or either at the top of this zone or within the zone, and then the buyers to come back in for a successful test up to around the 1700.